Good morning, traders. Welcome to the Pirate Traders live stream. My name is Charles. Today I am joined by Paul. Good morning, Paul.
Good morning, traders.
All right, so we got a survey up right now. Do you think the market is going to go up, down, or sideways today? There's 34 people hanging out. I want to see all 34 votes. It's anonymous. We don't know who you are. Just push a button. Up, down, or sideways today. What do you think the market's going to do? Paul, where are you at? Where do you think the market's going today?
I'm amazed by this V-shaped recovery, but I guess we're back at the bottom of the range, and I guess we'll go ahead and go back up.
All right, you're a vote for up right now.
I'm an up guy.
Let me see if I can talk you out of it. No,
Okay.
I'm just kidding. No.
You might possibly be able to do that.
Okay. So what do we have here? All right. As Paul just mentioned, we had a balance area that the market had been in for, a week and a half or so. I guess a little less than that. And it had been going sideways inside this range. We made an all-time high, which was a weak all-time high because we made it in an overnight market, not a regular trading hours market. So that is sort of a random piece of information that we're setting aside. And we're saying to ourselves, the market never leaves an all-time high in the overnight. It always, 100% of the time in the history of the stock market, it has always come back during regular trading hours sooner or later. Now, it doesn't have to come back the next day. It doesn't even have to come back the next week. We've had times where it comes back 2 months later. But most of the time, it comes back relatively quickly to test that all-time high in the regular trading hours at some point. So that's the first two pieces of data to take into account. We are at a balance area low. We broke out yesterday. Now we have come back to back test that breakout. So one of two things is likely to happen today. Either the market is going to reject and head back down and continue the momentum of the breakout to the downside, or we're going to pull back into the range, and then that would increase the odds of a move to the opposite end of the range. Okay? So I'm going to finish off this survey. Let's see what the results are. What do you guys think is going to happen today? Drum roll. 50% think the market is going up. 25% think the market is going down. And 25% think the market is going sideways. And 27 of you didn't vote. What's up, guys? What's it going to take?
It's the undecided voters, Charles. I'm telling you, it's all up to the undecided voters.
That is a bigger block than I realized that we had. I thought everyone had made their decision. Guys, the market opens in 30 minutes. You need to be making your plan for the day. You need to be deciding, what do you think the market is going to do? How will you handle it? What will you be looking for? You got to be thinking those thoughts now so that when that opening bell rings, you'll know what action to take depending on what the market does. All right, so this is our scenario. Either the market basically gets back inside the balance area, which technically right now it is. I would say the balance area low is around 55, and we're 10 points above that. Okay, so we're back in balance. Either the market stays in balance, in which case the highest probability is that we are heading back up to make a new all-time high, or the market rejects back out of balance today, in which case we are likely to get a pullback below yesterday's low. So this is a very simple concept, okay? This is happening on every time frame that you could read the market, whether you're looking at 1 minute candles and you're watching the minute by minute changes in the market, you're looking at the hourlies, you're looking at the dailies, you're looking at the weeklies, it doesn't matter. There is one basic concept that is always happening in the market. The market will go up as far as it can go up. And when it can't go any higher, it has to pull back to bring in new buyers. So the buyers on the way up are chasing price. They're feeling like they're going to miss their chance if they don't get into a trade. And so they keep buying and buying as the market goes up. When the market comes back down, it's like putting the market on sale. Okay? It's like suddenly the market just seems so cheap down here that people are willing to buy it. And understanding that sort of philosophy, understanding that approach to markets is really important in times like these. So we came up here and we made new highs. Okay. The market made a new all-time high, but there was no one left willing to go long up here. So we put the market on discount. Okay. We went sideways for a few days. Still wasn't enough to bring in the discount shoppers. So yesterday we made another dip and brought in those discount shoppers. Now, the fact that we bounced in the overnight and we got back to the balance area tells us that first set of discount shoppers have stepped in. That first set of people buying the dip have bought the dip, and they are now in their trades. So if the market stays up inside the balance area, then the new buyers can just be people chasing. People that didn't buy the lows yesterday that now regret it. And as they watch the market going higher today, they keep buying and buying and buying. Okay. That's what gets the move towards the new all-time high. If that behavior doesn't happen, right? If the market doesn't start to bring in new buyers up here inside the balance area, it means that this first dip wasn't a big enough dip to bring in those discount shoppers. So if the market fails and it starts to pull back down into yesterday's range, it significantly increases the odds we're going to make a lower low, right? Because this low wasn't low enough to bring in those buyers. Did you say something, Paul?
Yeah, not to interrupt. I'm just curious. I mean, looking at it, it was such a spike down yesterday. I mean, do you really feel like that was going to be, was that really bought back, or was that just somebody doing a massive, massive stop run that then having figured out that having satisfied their stops, the market rebounded more or less just out of inertia, just kind of sprung back out of elasticity?
The short answer is I don't need to know. Right. Like I don't need to know right now whether stronger hand swing traders bought that dip or not. I will find out today. Right. So today's market and this balance area low, this area around 55 that I'm watching, that's what will tell me. So I don't need to predict right now, was that strong hand stepping in yesterday or not? Because I'll find out today. If the market pushes above the overnight high, finds support, gets above the previous day's high, that answers my question, and I know what to do. Go long, right? If the market starts to sell off today, in particular getting below that overnight low, well, then I know this was just the first dip of more dips to come, and those strong hands didn't step in. Now, in terms of my personal feeling, I feel like this was just a bounce that we're going to reject today and head lower. But honestly, it could go either way. This is not unusual to have a balance area, break out, re-enter, and then immediately pop to the opposite end. So it really is sort of 50-50. I'm leaning a little more towards lower, but we'll see.
I really don't think we could ignore either the fact that we're in earnings season. And I'm not a total stock guy, but I mean, Tesla reported apparently surprising earnings yesterday, and the stock has definitely popped this morning. So maybe that has contributed to the rise overnight just because of thinner volumes. So maybe we would be going down had it not been for earnings surprises and stuff like that.
Yeah, that's a great point. I mean, Tesla up, $20, $21 right now in the pre-market. That's a pretty.
And I don't
decent...
know if they have a listing in European markets. If they did, those would already be up. And so that's what would be driving the pre-market U.S. I would assume they do have a European listing.
Yeah, I think Tesla has futures. I think there are Tesla futures you can trade.
Maybe.
Correct me if I'm wrong, chat, but I think there are actually futures on Tesla that you can trade 24/7. But what you're talking about is just this idea of if the market were to dip, what would get people buying? What would get them thinking, I want to go long this market? Great earnings. If they start seeing company after company after company coming out with good earnings, they could say to themselves, the market's going to be higher 3 months from now than it is now. I need to be buying this market now. So I personally don't get too in the weeds. I know you're not really that focused on individual stocks either. I don't get too in the weeds with that. Like I said, I just say, what is the market doing right now? And what is that likely to lead to next? So just one more time to beat it to death with today's market, the more time and the more volume we bring in inside the previous balance area, which is basically above 55, 58, 55. Okay. The more time, the more volume up there, the more likely we're going to gain momentum up. We could even make a new all-time high today or tomorrow. Okay. We could pass back through the previous balance area very quickly if we get momentum this morning. So first level I'm watching is the overnight high, new buying above there, bullish to test yesterday's high, and so on and so forth to the upside. If that doesn't happen, right? If we cannot stay inside yesterday's or inside the balance area, if we get back down below 58, 55, it is more likely we're going to get a large pullback. So that's my predictions as they are. Anything else you want to talk about, Paul? I'll hand it over to you.
I mean, just the simple stuff. I mean, jobless claims came in more or less in line, so nothing really to report there. And it does seem that some of these larger companies they're reporting their earnings this week, next week, last week, and it appears that earnings-wise, everything looking pretty decent. For if that's an indication of the overall economy, I'd say things are going well. I personally am still expecting things to go into neutral ahead of the U.S. elections and come back when they get resolved, which I'm afraid I don't think will be the evening of November 5th, but whenever they get resolved, they'll get resolved.
Certainly the next day.
I hope so, one way or the other. I mean, just removing the uncertainty factor would be, I think, a stimulus to the market one way or the other.
Yeah, I agree. That's why, if somebody were to ask me Kamala up, Trump up, like which will make the market go higher, I think it's either. I just think it's the stress of not knowing what to expect. Yeah. That's really probably the only thing dampering price,
Yep.
Just knowing, okay, this is what we're going to be dealing with over the next 4 years will make it so much easier for businesses across the world to make decisions about the future.
Yep.
So anyway, yeah, we'll see.
And we do this to ourselves. I mean, most European countries are doing elections that last 6 or 8 weeks. I mean, that's what they do. They do snap elections quite frequently. So,
yeah,
2 years is quite a bit of time to spend wondering about this kind of stuff.
That's true. I mean, I don't really have a feeling about that. I also don't know that I would like the idea of randomly having elections, like in the UK or whatever, where they could just decide, like, well, we're going to vote. We're doing an election. Like, oh, what?
In 6 weeks. Yeah.
Yeah. It would be great for the television networks. Man, would they love that. The advertising money would just be insane. But anyway, okay. So we got a couple minutes to kill here. So I got an email yesterday, and I thought it might be worthwhile to just take a minute to answer the email live here, because it is a question that I get quite frequently from people. And he basically said, I've been following the Bookmap Discord and the videos on YouTube, watching all the different moderators, and I find that your trading style most closely matches my style and what I'm looking for. Before I sign up as a member, I have a question. I see that you use a volume profile chart on the left of your screen. This seems like an integral part of your analysis and the importance of price levels. My charting software is TradingView. I don't think they offer volume profiling. Can you give me more information about what to use and its importance in analyzing the market? Okay, so the longer answer to this is it's a lot to explain. I teach it in a workshop, and it takes 2 weeks to go through everything because it's just a lot of pieces to put together. But to give you the long and the short of my approach to trading, the screen that you see over here on the left is a market profile screen. Market profile combines volume profile with TPO charts. TPO is basically a charting platform that uses either letters or symbols instead of candlesticks to show price movements. And it just allows you to visually kind of dial into exact levels with much more specific, specificness, and it lays it out in a 3-dimensional view. So it shows you how much time the market spends at each particular level by collapsing them on top of each other like this, where you see the fatter levels, that's where it spent more time. And when you combine that with volume, the levels where there are more volume, that's the edge. That is the advantage the market profile provides. In terms of where you get your market profile, it doesn't matter. You can get market profile anywhere. If you have the full version of TradingView, they have market profile. But anywhere, just Google TPO charts in the name of your broker, and I'm sure there's some platform that you can connect to that has TPO charts. If you have that, that's all you need. The company I use is called Window Trader. It's the most advanced version of market profile software out there, and the one that allows you to have most control. But it doesn't matter what you choose. To understand how I trade markets, to understand how my system works, I look at the market on market profile in 3 dimensions to tell me where certain business is likely to happen. So this morning is a perfect example of that. We saw the market break out of a balance area yesterday. Okay. I know that balance area low is somewhere between, say, 58.50 and 58.60, right? Somewhere in this range is the balance area low. So when I see in the overnight that the market is back inside that previous balance area, now I have information that I can use, right? Now I know one of 2 things is going to happen in the days ahead, right? I don't necessarily know what's going to happen today, but I know either in the days ahead, the market is going to continue lower, making lower lows, or the market is going to reverse probably all the way back to the all-time high. And that's just because of where the market is located right now. How do I pick that area? Well, because of where the market spent the most time and brought in the most volume. We can see in this area, down here, that this is where the market stopped spending time and bringing in volume. Okay, this is where it reversed and started going back up. So that's the area where if the market was going to find buyers and go back to the all-time high yesterday, it should have done it. It should have found buyers there and reversed and come back up. So that's why I know the market broke out of that balance yesterday. And that's why I know we're back in it today, because we're back above that level. So today it's the same question. Can we bring in the buyers? Great. We go to the all-time highs. If not, we need to make new lows. So by understanding where business happens on the chart, I can understand what's happening with the market, right? Is it going up? Is it going down? Do I need to wait for some more information? Do I need to wait and see what happens here or there? So this morning, I'm not going to be looking for trades inside this overnight range. So here's where I can see the overnight high. That's where the market ran out of volume and time in the overnight. I can see the overnight low, once again, ran out of volume and time at the low. So now I know what my overnight range is. From the close yesterday to the open today, where did the market trade? And I know this morning, because we're right on a balance area, what does the market love to do on balance area highs or balance area lows? It loves to chop around. It loves to grind and grind and grind and grind and drive us nuts. So I'm not going to mess with anything inside this overnight range. I'm going to call that a chop zone, and I'm not going to touch trades inside the chop zone. I'm just going to wait and be patient. Because if it gets above the high and it can stay above it, that is giving me that bigger picture signal that we're moving to the opposite end of balance. If it gets below the overnight low and it starts spending time bringing the volume down there, I know we need to make that new lower low, that the move to the downside isn't over. And I know I don't have to force trades inside this chop zone, because there's plenty of money to be made from here to here and plenty of money to be made from here to here. And in either one of those scenarios, the likelihood that the trade will work is very, very high. Whereas inside the chop zone, it's a complete gamble and a guess, and I have no idea. And so as a trader, if I only take trades when I understand what the market is doing, okay, I understand we're heading up to all-time highs, or I understand we're going to make new lows, and I choose entries where I have a high probability of the trade working, I can make money more often than I lose money. And that is essentially my approach to trading. So almost everything comes from the market profile chart. I then just use Bookmap and what we call the market internals, which is this set of charts right here, to kind of confirm my opinion. I think I understand what the market is doing. Let me take a quick look at one of these other charts and see, does the data from those charts confirm what I think is happening? If it does, I enter the trade. If it doesn't, I don't. As simple as that. All right, guys. Well, we will call it quits there for today. Thank you, Paul. Appreciate you, brother.
Yeah, I will tell you, I did go back and look it up. Tesla does have listings in Frankfurt and London and Vienna. So pre-market for us is full market for them. So it has been trading at those prices. They're probably realistic where we'll open. So
there you go.
And somebody in the chat is asking me a question on my thoughts on the dollar and 10-year yields. And I'm not really into currencies. I've never understood them. But what I see is that the European Central Bank is in a war with the Federal Reserve. They're both trying to drop their rates. And ECB has dropped its rates 3 times this year and will probably continue to do so. And I strongly suspect that the Federal Reserve will continue to do so. So it's going to be a dogfight. That's what I see. But maybe we can look up the chart, Charles, and we'll cover it next week.
Sure, let's do it. For the dollar or for the yields?
Find one we can understand, which may end up being neither.
We'll overlap the two on each other.
There we go.
Fun.
That'll be fun.
Perfect. Yeah, sounds good.
All righty. Thank you so much.
All right. Thanks, guys. We will see you tomorrow morning. Have a good day. Happy trading.